Let's calmly figure out what is actually happening with Hedera and the HBAR token right now. On one hand, the price is still far below the all-time highs, down more than 80% from the 2021 peak. On the other hand, we are clearly seeing signs of stabilization, quiet position building, and preparation for the next major move. As of mid-February 2026, HBAR is trading around $0.1, and the market is literally squeezed into a tight range, using current prices as a balance zone after a long decline from the highs of late 2025. This is a classic calm before the decision phase. Sellers are not pressing as aggressively anymore, and buyers are not chasing the price up at any cost. They are calmly accumulating near current levels. Technical indicators confirm this stabilization phase. MACD is coming out of a deep bearish zone toward the zero line, and RSI is rising into the neutral area around 50, showing that sellers are slowly losing dominance. But at this stage, it is not yet a full trend reversal. It is more of a flattening and an accumulation phase, which is exactly the kind of moment you want to read correctly. Current price structure, tight range, and balance of power. If we zoom in on the last several days, HBAR is trading roughly in the 0.099 to 0.101 area, with daily fluctuations around 1% down or up. Volatility is low, liquidity is stable. This is not a panic crash and not an euphoric pump. It is a neat consolidation. From a technical point of view, you can highlight a few key zones right now. The lower buyer zone is around 0.08, 5 to 0.09. This is exactly where the current recovery started. That is where the midterm buyers stepped in, those who believe in further upside and have already entered the market. The psychological level is $0.1. It is a round number and the actual center of the current balance. For now, the market is using this level as neutral territory, not as a serious resistance or as a strong support. The local resistance zone is 0.11 to 0.12. According to Brave New Coin and TradingView, this is where bulls run into profit-taking and fading momentum. What is important is that while MACD is close to the zero line, the histogram has started to tick slightly positive, and the MACD line is approaching the signal line. That is a sign that bearish control is weakening. RSI is moving into the 51-52 range, so we are leaving the suppress zone and entering a more healthy, balanced market condition. In simple language, the HBAR market is not in despair and not in FOMO. It is in a phase where bigger players decide whether they want to actually flip the trend, or whether it is still more profitable to push the price slightly lower to accumulate cheaper liquidity. Derivatives and behavior of money. A very interesting signal right now comes from derivatives. According to BN Crypto, HBAR funding has shifted to the long side. Traders in futures are willing to pay a premium to hold long positions. That tells you that part of the market does have bullish directional expectations. But at the same time, the funding profile has been very unstable over the last 2 weeks, sometimes skewing toward shorts, sometimes toward longs, and flipping quickly. That is a textbook sign of uncertainty. The market understands that this is an important zone, but there is no strong consensus yet whether everyone is ready to push higher right now. There is also the sentiment side. One of the analytics platforms reports a bullish sentiment for HBAR of around 70%, but at the same time the fear and greed index is sitting in the extreme fear area. In normal human language, this means many technical models are pointing higher, but the broad retail crowd is still scared, remembering previous long drawdowns and sideways phases. For a longer-term speculator or investor, this configuration is often attractive. When the technicals say upside is possible, while retail is still afraid, the market has room to move without being overheated. The key is that fundamentals must not break. Fresh developments, updates, network, coming dates. Now let's look at what has actually been happening around the network and the project itself in the most recent days. First, Hedera has scheduled a testnet upgrade to version 0.71, which is set for February 19, 2026 at 18:00 UTC. This is not a mainnet hard fork and not a dramatic price event by itself, but it is an important marker that development is ongoing. The team is actively improving infrastructure and preparing the ground for future upgrades. Second, the Hedera calendar shows a fairly busy February. Exchange activities, new listings, partnerships, various conference appearances, as well as token locks and unlock events. For price, that is a double-edged factor. Unlocks are usually perceived as potential selling pressure when large volumes can hit the market. Partnerships, listings, and conference visibility can do the opposite, adding narrative and attention from new participants. Another layer is the broader context coming out of late 2025. By 2026, Hedera has been established as an infrastructure player for the institutional segment, with a strong focus on tokenization of real-world assets and AI-driven fintech solutions. In 2025, the network got a spot ETF for HBAR and saw significant governance updates and expansion into traditional industries. These are the fundamental reasons why many are looking at HBAR not only as a speculative token, but as part of the institutional infrastructure story. Fundamental context. Why Hedera is still on institutional radar? To understand the potential for further growth, you need to step back and ask, where is Hedera heading as a network? Analyst reports for 2025 describe Hedera as one of the key players in the institutional-grade infrastructure segment, especially at the intersection of real-world asset tokenization and high-throughput enterprise solutions. In other words, this is not just another loan competing for DeFi yield and meme tokens. It is a network positioned as infrastructure for large enterprises, financial organizations, and new forms of digital assets. Hedera is focusing on several major directions: real-world assets and tokenization, bringing real assets from real estate to financial instruments on-chain with clear rules of ownership and circulation. AI-driven finance, integration with systems that use machine learning and artificial intelligence for data processing and automated decision-making. Corporate use cases, participation of large brands and companies in the ecosystem, which gives Hedera that enterprise credibility most traditional loans lack. None of this instantly pumps the price, but it strongly influences how institutions and funds view HBAR in their longer-term allocation decisions, forecasts, and models. What analysts are expecting. Now let's talk about what the models and analysts see next for HBAR. One of the technical forecast services is showing a short-term upside of roughly 0.7 to 1%, with a target around $0.1 to $0.101 over the next couple of days, with a bullish sentiment around 70%. That is a very local outlook, more about intraday or intra-week behavior. The longer horizon models, published around February 17, point to a potential move into the 0.123 to 0.125 area over late February and early spring, assuming the recovery continues and the broader market, especially Bitcoin and major altcoins, does not break down. And those same forecasts are upfront about the other side of the coin. The possibility of a pullback back toward roughly 0.122 and below as part of a corrective leg if buyers fail to hold momentum. If you break it down logically, the consolidation phase around 0.1 is the current base. A breakout and sustained hold above 0.110.12 would be a signal that the market is leaving the local range to the upside. A breakdown and close below 0.09 with a retest of 0.085 would be a scenario of extending the bearish phase and searching for lower prices. So the market is standing at a fork, and that fork is very clearly defined by these levels. Technical scenario, levels, risks, and a possible framework. If you imagine explaining the chart step by step to your audience, the logic could go like this. First, we already saw HBAR bounce off the 0.085 to 0.09 zone and move higher. This area is key for the bulls. As long as it holds, you can say the market is building a local bottom and pushing up from it. Second, the psychological center is 0.1. Right now, the price is hovering around that mark, and the market is using it as a neutral anchor. There is no clear euphoria or panic here, which makes this level very convenient for accumulation. Third, the decision zone is 0.11, 0.12. That is the local resistance level highlighted by both the price action and the indicators. A breakout and proper close above 0.12 with strong volume and aligned derivatives would be the first serious signal of a midterm bullish impulse. Fourth, the indicators are confirming consolidation, not trend. MACD is crawling up towards zero, and RSI is coming out of the weak area into the low to mid-50s. That is not the typical picture of a strong bullish trend yet. It is more of a market is ready to choose a direction setup. Fifth, derivatives show doubt, but a slight tilt to the bulls. Funding is net positive, but the profile has been choppy lately. That means confident shorts are gone, but longs are still cautious. From this, you can build a simple 3-scenario explanation for your viewers. Base case: continued sideways in the 0.09, 0.12 range, accumulation, and gradual strengthening as demand appears near support. Bullish case: breakout above 0.12, move into the 0.123, 0.125 band, and possibly higher if the broader altcoin market stays constructive. Bearish case: loss of 0.09, return to 0.085, and a deeper extension of the corrective structure. News and narrative: what is shaping sentiment right now? In the last 24 hours and the coming few days, the information flow around HBAR is focused on 3 main angles. First, the testnet update on February 19. It is a clear message that development is active and on schedule. That alone does not make the price skyrocket, but it supports the narrative that Hedera is steadily evolving. Second, the event calendar for February, with exchange activities, new listings, partnerships, and unlock schedules. Each of these can act as a short-term catalyst for volume and volatility, depending on how the market reacts. Third, the institutional narrative. Analysts still frame Hedera as a platform for institutional-grade infrastructure, real-world asset tokenization, and enterprise use cases, not as a purely speculative Layer 1 experiment. On top of that, there is broader discussion about a massive multi-crypto ETF basket with around $1.8 trillion of assets under consideration, and HBAR is mentioned in that context as part of the wider institutional rotation into crypto. Again, this is not a tonight we pump trigger, but it feeds the longer-term thesis. If institutions keep moving into crypto via ETFs, infrastructure networks like Hedera are well positioned to benefit. On social platforms and crypto Twitter, the tone around Hedera is the usual mix. The community is pushing the enterprise, RWA, and AI narrative and focuses on the long-term arc, while part of retail is frustrated about slow price appreciation despite big-name partnerships. That is typical for any infrastructure project going through an accumulation phase rather than a hype phase. One clear takeaway for your audience: if you compress everything into one clear message for your viewers, it would be this. HBAR is standing at a crossroads. The price is consolidating around 0.1. The market has stabilized after a long drawdown and is preparing to choose a direction. The level map is simple and easy to explain. 0.085, 0.09 is the base for bulls, 0.11, 0.12 is the decision zone, whose breakout could open a path towards 0.12, 0.125, and beyond. Fundamentally, Hedera remains a bet on institutional infrastructure, tokenization of real-world assets, and real corporate use cases rather than pure speculative hype. And if 2026 becomes the year When the market revalues those projects that are actually working with real businesses in RWA, HBAR has a solid chance to be among the main beneficiaries.